Hello, this is Steve Malone with Compass FX. Hope you're doing well today, and again, some good trades. Over the last few weeks, we've heard a lot of news about risk in the marketplace, a lot of risk appetite or risk sentiment. That simply means that traders, institutions, speculators are seeking out a greater appreciation for their investing dollars. Now, when it comes to trading the Forex market, oftentimes what institutions will do, they will seek out a high interest-bearing currency and buy that and then sell against a lower interest-bearing currency. The best one of the bunch to monitor that type of risk-on sentiment is the Aussie yen. And we've seen since early November, the Aussie yen has made this continual climb higher and higher. As a matter of fact, it's put in a high of almost 700 pips here since early November. And it broke the March high that we had at about 88.60 area. We can see a double top, and then there's a possibility of a move back on this strong move up. Has risk sentiment started to fade as we go into year end? That's a possibility. So today I want to share with you some things to look for. When talking about risk on sentiment and monitoring the Aussie yen is kind of the canary in a coal mine. It literally kind of shares with us the sentiment of the marketplace as to risk on or risk off. We can see the turn starting to happen. And it's already been talked about today that if we take out the December 13th lows and the 10-day EMA sitting right around the 87.75 level, we could see a swing from risk on sentiment to risk off sentiment. Well, what's the big deal about that, you might ask? It has everything to do with how the market has been reacting to the risk on currencies like the euro dollar and the pound dollar. As of late, we've heard Mario Draghi of the ECB mention that the euro dollar is irreversible, and we've seen the Federal Reserve FOMC meeting that the current low interest rate for the dollar will remain until we hit a 6.5% unemployment rate, whenever that will happen. Well, that has given a strong boost to the euro. So what do we get? We get a push higher and higher on the euro dollar. However, take a look at this. Again, the Aussie yen is kind of the canary in the coal mine. When we start seeing this turn over, and if it breaks this level and holds below this level, watch what happens to other currency pairs that are considered risk-on currency pairs, like the euro dollar. Notice the pullback. Today we broke right above 33, and now we're setting down almost to 32, a 100 pip drop from where we were. Take a look at the pound dollar. The pound dollar got up there and broke 63. Look where we're at, just below 62.50, down about 50 pips. And you can take a look at the dollar Swiss. The dollar Swiss has been moving down, down, down as the Swiss franc was getting stronger against the dollar. And now we're seeing a swing back to the dollar out of higher interest-bearing currencies like the pound, like the euro, like the Aussie dollar, like the Swiss franc, and moving back into the dollar. When we go into a risk-off scenario, institutions, traders, and speculators seek safe haven. What better safe haven than the faith and credit of the U.S. dollar via treasuries and bonds? Now, something else I want to point out here too. Take a look at the Traders Dynamic Index in the Aussie yen. You can see a nice setup right now in the Traders Dynamic Index. What do we have right here? This shows a head and shoulders pattern. You can see that we've been moving up and up and up, but look at the divergence here. So we have negative divergence. We have a head and shoulders pattern on the number one risk-on currency pair in the world, the Aussie yen. So if this starts taking a dive down, the market shifts from risk on to risk off. Whether that be profit taking or truly risk aversion in the marketplace, it doesn't really matter. But at this point, if we get this turn and push to the downside on the Aussie yen, look for your other higher risk currencies, those higher interest bearing currencies like the euro and the pound, watch them start to turn and fall. The Aussie yen is the canary in a coal mine. Watch this currency pair. When it starts making moves up, look for more risk in the marketplace. When it starts to make moves down, look for more risk off or safe haven, a move to safe haven in the marketplace. And one final thought, as we go into year end, be aware that the markets will get thin and very volatile as the senior traders leave for the Christmas holiday and junior traders take over. Junior traders have a way of trying to make a name for themselves, so they have a tendency to push and pull the market within the envelope or the boundaries that senior traders have given them. Some try to push those boundaries to make a name for themselves. So watch for any volatile spiking over the coming 2 weeks. For right now, monitor this. If this breaks the 87.75, I have a feeling it'll come down. It'll test the 21-day EMA right around 86.80 level. If that holds, we get another possible bounce back up. Also, if the 10-day holds, we get a push higher. If this pushes higher, we go all the way up to 90. That's seen out on a weekly chart. You can see back here, we hit this level going back to April 2011. So you can see that this range high area we're at, and we could possibly now see a possible move back down, strengthen to the dollar. Euro dollar comes down, pound dollar comes down, dollar Swiss rises. Monitor the market for those potential occurrences. Well, this is Dean Malone with Compass FX. Hope some information about the canary in a coal mine of the Aussie yen will help you in your trading. Y'all have a great day. Get some good trades. We'll talk to you next time. Bye-bye.